if 53,000 is broken, the next defensive wall is at around 52,680 to 52,800. So these are the levels that you should be watching out for as well in trade. But let's also get in Nilesh Jain, Head AVP Technical and Derivative Research Equity from Centrum Broking, as well as Sameer Dalal from Natwaral Stockbroking joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Nilesh, let me come to you first in terms of levels. The recovery that has come in today seeming to be slightly strong. However, the range is absolutely narrow. And the weakness in terms of Bank Nifty, especially the private banking space, is something which is persistent. What is the setup looking like for you if to look at the next 1 hour of trade and getting into tomorrow's session?
Very good afternoon to you. Good afternoon, everyone. A very good rebound that we have seen from the lower levels today once again. Because if you see in last 6 consecutive sessions, if you see the structure, we have seen multiple attempts were made to surpass its 50-day moving average, which is right now placed at 23,730 levels. At the same time, Nifty has taken a very strong support in the zone of 23,300 to 23,400. So looking at the overall setup, we can expect a positive close today near about 23,650 to 23,700 zone. We have seen a sharp cool off in the IVs as well today. So that is also supporting the positive move that we have seen specifically in the second half of the session. So looks good as far as Nifty is concerned with closing perspective. If it manages to close about 23,600, that will be considered as a positive close. Then we can expect a follow-up move in a coming session on the upside towards 23,700 or 23,800. Coming to the Bank Nifty, that has been the weakest link on stall and where we have seen a lot of underperformance recently. So Bank Nifty needs to surpass 54,000 level on the upside. Then only we can expect a strong move on the upside towards 55,000. So as of now, all eyes will be on banking space, specifically private sector bank, where we have seen a lot of underperformance to continue. So just to sum up for the day, for the remaining 1 hour, we expect some sort of a positive setup and positive close. And for the coming days, we are likely to see a break above 50 DMA that is placed at 20,730.
And Nilesh, what about your picks for the day? Because things have moved, since the past 1.5 hour, right? A lot of sectors have turned green. Overall, your view with regards to what counters should one go ahead and buy and trade in right now?
Well, absolutely. We have seen multiple positive development on sectorial front, on sector-specific move we have seen in today's trading session as well. So first of all, within OMC space, after a long time, we are getting some bit of conviction coming back. So there could be possibility that we may see some follow-up move to continue on the upside. So HPCL, one particular counter that is on my radar, given the kind of a breakout that we have seen today from its 21 DMA moving average. It has also taken support at its 50 DMA. So we can expect a follow-up move towards 390 to 400. So these are the two targets on the upside. First target would be 390, second target would be 400, and stop loss can be placed somewhere around 372. So that will be my preferred bet within OMC space. And coming to other stocks like Paytm, particularly this particular counter, looks like giving a good close and a good setup as well. So we may see a follow-up move in Paytm towards 1180 to 1200. One can keep a stop loss below 1120, and Paytm is also buy.
Okay, so that's with regards to the topics coming in. Paytm is also at the day's highest levels. Sameer, coming to you, a quick question in terms of the rebound that's coming in the markets. IT has been a sector which has been trying to show that strength over the last 2 days. Today also it was showing its resilience as well when we opened up. There is a little bit of profit booking that's coming in today, and you have Nvidia that will be reporting numbers overnight, where a lot of cues that the sector would be taking tomorrow. How are you looking at the setup in terms of IT currently? Would you be a buyer at current levels? Because valuations somewhere are very cheap right now. And if you have to compare the conviction or valuations for large cap IT versus mid cap IT, it's reversed, where now people are finding large cap IT more attractive as compared to mid cap IT. How are you looking at it?
Yeah, so first of all, thank you for having me on the show. When it comes to the IT sector, we've been saying for some time that we think it is a defensive kind of a play. We are not saying that this is a sector that's going to be giving you exceptional returns. You can expect anywhere between 8 to 10% CAGR returns over a 2 to 3 year period at the moment, at least the way things stand. Now, you talked about the fact that valuations are cheap in IT, or cheap relatively to what they historically used to trade at. But then the growth rates are also the lowest compared to what they used to be historically. So your valuation multiples are obviously moving in the same level or in the same direction that growth is moving. As growth tapers down, so is the valuation multiple tapering down. So to assume that growth is going to pick up over the next 1 year seems highly improbable. And hence, I continue to believe that I think the valuations are not going to re-rate up. So you're not going to get any valuation up. What you're going to have to work on is whether the growth can come through, and then the cash flows that pay out the dividends give you that kind of return. So anywhere between, including everything, 10% return. Now, a second thing I wanted to point out, which is also something important, is if you look at Indian IT services, the services of employees that they provide, it's very similar to what something like a Cognizant supplies, which is listed in the US market. Cognizant is trading at about 10 times forward earnings compared to our Indian ITs trading at 15 times. So we are still trading at a premium compared to what US believes, or US participants believe, that traditional IT, ERP, employee kind of generating services should trade at. So is it possible that the valuation multiples keep moving down? That's a possibility given the fact that FIs still hold a large chunk of Indian IT services. And if they want to take a call that, look, I don't want to take the dollar risk, the currency risk, plus I'm getting Cognizant at a cheaper valuation, why not sell my TCS or Infosys and buy a Cognizant? So can it go down further? Yes, it can. Should technically, given the fact that India is a growth story, Indian IT keep falling? Probably not, but it's a tussle at this point of time. And the call we have is a defensive play, buy it with a very low expectation of 10% return.
So that's with regards to where IT goes. Let's quickly just address Samvardhana Motherson Q4. You know, across revenue, EBITDA, margins and profits, the numbers have actually beat street estimates, and that's the reason why you're seeing that kind of a spike that's coming in terms of the stock as well. 3% up move coming in there. Interestingly, the margins have actually been in double digits at 11.1% versus a street expectation of 9.8%. Profits have also been ahead of expectations as well. In terms of absolute numbers, it is seeming to be good, but there has been a one-time loss of 194 crores during the quarter versus a loss of 46 crores on a year-on-year basis. In terms of individual businesses as well, wiring harness business, a 13% growth. Modules and polymer business has seen a growth of around 6%. And in fact, I will be getting my colleague Puneet to decode this for us better. But that stock is at the day's highest levels as we speak. Along with this, you have a Grasim Industries also, which has just reported numbers. If you can just pull up that one on the screens and see what's happening there. That stock is also seeing a spike right now. A net loss of 164 crores versus 288 crores. So the loss has narrowed when it comes to Grasim, and Mahima tracks the space pretty closely. Mahima, what do you have for us? A one-time loss of 82 crores versus a loss of 114 crores is what I'm seeing on the screens.
Yeah.
Revenues have grown, and if you have to look at the EBITDA, what is it telling you?
So basically, that is on account of an exceptional loss, the one-time loss that we are seeing, and that is on account of an impairment of certain plant and equipment building that they've done with regards to their chemical Vilayat facilities. Barring that, Hiral, I think the standalone numbers look pretty impressive, because we've been seeing as to how the chemical side of the business for Grasim has been impacting their overall numbers. But this time, it seems that the overall top-line growth seems to be, something that the street is probably liking. From a 8,900 odd crore to a jump of 11,000 odd crore is what we've seen. Cost of raw material slightly has gone up for them. Purchase on stock in trade is also gone up almost by 800 odd crores. So that's something which is putting pressure in terms of where the margins go. But overall, in terms of where the prima facie, the first reading of numbers go, I think it seems to be a good set of numbers. We'll have to see as to how each set of businesses have done.
I think the paint business also will be,
exactly,
Builder Opus is going to be the key this time
We'll
around.
have to wait for the press release to come out.
We'll wait for that, but in the meantime, let's even go across to Puneet, who's standing by to give us little more details with regards to Samvardhana Motherson. Puneet, apart from the key numbers, any key highlights that you're picking up so far in terms of your first cut?
Well, thank you for that. It's definitely a very good set of numbers actually, and beaten estimates also quite handsomely at this point of time in Q4, where you've seen a lot of volatility, especially in the input cost prices as well. So when you look at, in terms of the EBITDA margin, I think that's one of the biggest beats that has come in Motherson's history actually at this point of time, where the EBITDA is up almost 24% on a YOY basis, 3,792 crores, and the margin at 11.1% versus what the estimate was at 9.8%. Despite a 16% quarter-on-quarter rise in commodity cost, and hence while this was more back-ended, so you could see some impact in Q1. I think 11.1 is one of the highest, given that the company announces further expansion every quarter, and this time around as well that has happened. So I just wanted to highlight that they've announced 4 new developments compared to last quarter, where 2 new capacities have been included, and that's for the packaging business, will be delivered by Q3 of FY27, and capacity expansion being announced for the wiring harness businesses, which will come in Q1 of FY28. And just in terms of what we've seen on the wiring harness business, the growth has been decent at 13%. We got some picture because of Motherson wiring numbers as well for that. But overall, we'll have to watch out for the commentary, especially on what he's seeing on FY27 growth, but also on the input cost impact, what could be expected in Q1 as well.
Okay, all right. So that's, of course, the view coming in on Samvardhana Motherson. Puneet, thank you so much for getting us that first cut. But Nilesh, I'll quickly come to you on both of these names. Samvardhana Motherson, firstly, the stock is, let's try to pull that up and see as to what it's doing right now. But your view overall on the charts as to what should one do right now, taking a position probably makes sense?
Well, absolutely. Prima facie, I think the numbers are good. That's the reason we are witnessing a positive impact. Even on derivative front, if you see, close to 10% of OI addition can be seen. So good long build-up happening in this particular counter. The stock is trading near, in fact, it has hit a fresh record high as well in today's trading session. So very strong chart pattern. And we may see a follow-up on the upside to continue towards 138 to 140 from a very short-term perspective and position perspective. I think it has the potential to move towards 145 to 150 as well. So keeping a stop loss below 130, it's a very good buy at current level from a short-term trading perspective, with a move expected to go towards 138 to 140.
What about Grasim? Because the last time that it touched, the high of 3,000 odd levels, it was not able to break its previous high. So what are the charts indicating there?
Well, absolutely. There are multiple resistances near 3,000 zone. And in fact, if you see, multiple attempts have been made, as you have rightly pointed out. So it is important that it should take out 3,000 mark decisively. Then only we can expect a strong uptick towards 3,200 to 3,400. But yes, having said that, at current level, one can accumulate this particular counter. There are possibilities that once this consolidation gets over, we can expect a move beyond 3,000 as well going forward. At current level, if somebody is already holding the long position, can keep a stop loss below 2850 and post breakout above 3,000. The next target would be 3,200 to 3,400.
So that's with regards to Grasim. But moving on, Viyash Scientific, which was earlier Sequence Scientific, but after the merger, it has delivered a standout quarter with strong revenue growth and a sharp jump in profitability. Varsha is standing by to tell us why we've actually got this as a stock of the day, seeing gains of nearly 11%. Varsha, over to you.
Well, thank you so much for that. Clearly a turnaround quarter, I would say, and company is doing a lot of things, going into high margin products which will enhance their margins. But starting with the key 4 numbers, because that's what the highlights are. Revenue is up almost 20%. Look at the EBITDA margin, sharp uptick over here, and which has translated into net profit. Now, why we have seen this strong turnaround in numbers? First is, of course, the Q4. If you see, is the strongest quarter ever for the company. Revenue growth strong at near 19%, as I said. Even EBITDA growth is also much higher at 64%, and the operating leverage has clearly kicked in when it comes to this counter. Now, what is changing structurally from low margin to high margin mix, which is what leading to this expansion in margin. Companies also from scattered operations to integrated platform, and also if you see, from company is diverting from leverage balance sheet to strong balance sheet. Now talking about merger benefits, because this is also playing out with the company. We all know that Sequence Scientific and Viyash Life Sciences merged in 2025, and the earlier merger has been now fully integrated, and one unified platform is actually improving efficiency. cost synergies and operating leverage are kicking in, and management is guiding for more synergy benefits ahead, and also one of the reasons why you're seeing better numbers for the company. Also better business mix, this is where the key highlight is, because the formulation is growing at a faster rate than APIs, which is a higher margin one. Higher share from regulated markets like US and Europe, again a higher margin one. Then India, US and Europe all are showing strong growth, and this also improves quality and sustainability of earnings. Lastly, on to the pipeline and growth visibility, well, 19 products in pipeline across APIs and formulation, and the new approvals and filings across US, EU and Japan. R&D integration is accelerating product launches, and more launches are expected going ahead. So overall, the story over here is company is shifting from low margin to higher margin products, and of course from semi-regulated markets to more regulated markets, or to regulated markets, which will enhance the margins going forward. So this is all the story when it comes to this counter.
It's a very interesting name, because before the merger with Viyash,
Yes,
Sequence Scientific
Sequence
was slightly under pressure somewhere, but all hopes were in terms of the merger going through, and that's what it has done to the business. Samir, any view when it comes to Viyash Scientific? Because a newly merged entity, the results are seeming to be really strong, and with Viyash, it's more of animal pharmaceuticals, which, you're talking about.
So sadly, I never covered Sequence also before it was in its original avatar, so no view on this one.
Charts?
Well, even I don't have any coverage on this particular counter due to the limited data.
Okay, I mean, it's also interesting to see, right? 120% growth is what we've seen on FY basis as well. So FY26, the overall top line has grown. Margins have significantly improved and could improve further as well. So that's the key takeaway, and that's why we're seeing the stock with an uptick of around 11.5%. But let's also bring in my colleague Soumit Sarkar. He might take a while to while we get him mic'd up. I think we were talking about Viyash. The other counter which is looking very interesting today is Barbecue Nation. In the QSR space, it's not every day that a stock like this is zooming in trade. It's
locked in upper
circuit, up 20%. I think I'll go to Samir on this one.
Were the earnings good for a Barbecue Nation? Because it is a still smaller counter, not really done much in the past as well.
Yeah, but I think the interesting move for them is that now they are going for a smaller format store. They've revamped everything that they were doing earlier, and that's going to work for them. Even they are going very big when it comes to store additions, but at the same time, they're saying that the store format is going to be lesser. So area per square foot is going to go down.
This gets me worried somewhere, because you're talking about Barbecue Nation, which is shifted. You're talking about a Westlife, which is also not doing that well the way it used to in the past. There was another company called Specialty Restaurants as well. And I think a question with Samir on this is a must, I think, Mahima.
Yeah, I think he likes Jubilant, if I'm not wrong, right, Samir?
Yes, I do like this space and, United Food Brands. So, well, look, the results do not really warrant a 20% up move, okay? Let's be very frank. Yes, we saw SSSG growth of 14% on a year-on-year basis, but this was because the numbers had been so subdued over the last couple of years that we are seeing these kind of growth. If you go back if you just scale back maybe 2 years back, you'll see that they've just barely reached, or they've not even reached what kind of sales per store they had 2 years ago, right? So, of course, there's still more room for growth. Now, what they've done, what they've changed for themselves is they've got a couple extra brands which are slightly more premium, which is Salt and Toscano. Salt is an Indian food and Toscano is Italian food. Those are also expanding rapidly. Plus, it's creating its presence globally. I mean, in the sense they're open, they've got 14 stores internationally or Barbecue Nation. So it kind of becomes a brand by itself, for, an international reach, and, it kind of draws in more people. The whole story of Barbecue Nation was initially the experience that they served, where you could grill things in front of you and then eat it fresh. I think to some extent that has become kind of passé, and that's why if you see the numbers have taken a bit of a downturn. But I think if consumerism is to come back, I think barbecue will do well. But does it warrant a 20% move up? Probably not today. But yes, I mean, it's good to see the stock up. We are very positive overall on the QSR space. We've been saying for a while that all of these counters, Westlife, Devyani, barring Jubilant Foods, who's actually been able to deliver SSSG growth, all of them have seen degrowth. So once consumerism, now I think it's going to get pushed back by 6 months because you're going to see inflation once again coming back with the rise in crude and diesel and petrol, which is going to lead to inflation across the board, because of which maybe people may not spend as aggressively. But this India story by itself for QSR is a 5-year story. And if you believe that, a McDonald's, which is only about Westlife, which is 500 stores in the country at the moment, well, 480 to be precise, can scale up to about 900 or 1,000 over the next 5 to 7 years. That is the growth trajectory. And then SSSG and operating leverages play out. These can be great investments from a 5 to 7 year.
Okay, we'll have to wait and watch and see as they pan out. But thank you for that, Sameer. But let's go across to Somit Sarkar, who joins in with all the chatter from the dealing room. Somit, I think some bit of interesting stuff that you will have today with the kind of rebound that's come in today's session. I'm not sure if the street is looking out for something which is sustainable, because the tug of war has continued.
Well, yes, benchmark seems to be in a consolidating mode. It's not giving a big breakout, either it's giving a big breakdown as well at this moment. And even volumes, if you look at in the cash market, they're quite subdued. In fact, they're down nearly 13% compared to what we had seen yesterday. So not much of an action. Few stocks still what dealers have highlighted in trade. Firstly, it's Godfrey Phillips. The buzz on the street is that a block deal might happen very soon. 15% of the promoter stake might see change of hands. So it's an inter-promoter transfer. Not that this stake will be sold to some external party. And also this block deal might happen in the block window, is the buzz on the street. So keep an eye out for Godfrey Phillips here. This stake sale has been a big overhang on the share prices of Godfrey Phillips. For RBL Bank, there are buy flows on the institutional desk. Both FI and DIs have been accumulating this counter, and delivery volumes, well, could be on the higher side for RBL Bank. And lastly, when it comes to DV's Lab, there are sell flows on the large HNI desk, is what dealing rooms have indicated, and dealers are expecting the Q4 to be a bit muted and weakish for DV's Lab.
From this, thank you, Somit, for that. Godfrey Phillips, I mean, we did see price increases that were announced. BNK Securities was the one who put out the details yesterday on some of the categories. And now you're talking about a block deal, 15% between promoters. Anything on the charts, Nilesh, on a Godfrey Phillips?
Well, Hiral, recently we saw an uptick and counter-phase resistance at 2500. So that is acting as a very strong resistance. Well, good part is that after the recent decline in last 2-3 sessions, it has reached to its crucial support at 2200. So looks like it may find support near about 2200 to 2250. And we may see a gradual uptick once again. The recent correction, in fact, has given a good opportunity. If somebody is looking to make a fresh entry, then keep a stop loss below 2180, and we can expect once again a move on the upside towards 2400 to 2450.
So that's with regards to Godfrey Phillips. But moving on,
Our R&D capabilities for significantly accelerating our growth ambitions globally. We believe our technology has the potential to address the next generation crop